So here's how the amortization schedule for the above case looks like. The beginning balance of the liability is 386,087, which is the present value of $50,000 paid per annum for the period of 10 years, discounted at the rate of 5%, which is the incremental borrowing rate. But the net asset balance is 401,000 because the lessee has to account for the additional 15,000 cost which has been incurred. So again, going back to the case, the additional cost is 20,000 indirect cost which is incurred, out of which 5,000 is reimbursed by the lessor. So the net of cost is 15,000 incurred, which has to be added to the asset value. Is the reason why the net asset balance at the beginning of the year is 401,000. So on the year one, again, the interest expense is 19,304, which is 5% over 386,000. So 386,087 into 5% is 19,304. And then the net of 50,000 minus 19,304 is 30,696, which is used to reduce the liability balance. So the liability balance at the end of year one is 355,391. On the depreciation side, so the beginning balance is 401,087 and the asset is depreciated over a period of 10 years over SLM basis. So the depreciation is 40,109 per annum, and in the year 10 the balance is zero. The net asset balance is zero. So let's look into the accounting portion part. On the initial journal entry under IFRS 16, you have to record both asset and liability. So RU asset debit 386,000 and credit is lease liability of 386,087. In addition to that, there were certain indirect costs which has been incurred and then the lease incentive received by the lessee. So for the initial indirect cost which has been incurred, the accounting entry would be ROU asset debit 20,000 and to bank credit the 20,000 which is for the initial indirect costs. On the lease incentives received of $5,000, the entry would be bank account debit, which is reimbursement of commissions paid by lessor for $5,000, and credit would be ROU asset of $5,000. And using the amortization table above, the journal entry at the end of the year one would be your lease liability account debit, 30,696, which is your reduction of the lease liability balance. If you see on the year one, the liability reduction is 30,696. So that has to be debited and reduced from the lease liability balance. So that's 30,696. Depreciation expense at the end of year one is 40,109, which is your balance, net asset balance amortized over 10 years. So the year one, the depreciation expense is 40,101, and then the debit would be interest expense again, 19,304. This is the interest expense on the year one is application of 5% on your lease liability balance. So 19,304, and credit would be bank, which is your lease payment of 50,000, and the other credit would be accumulated depreciation of 40,109.